We got everything working. So the key focus for me is these candlestick charts, or rather, what do you call tick charts? Well, they are candlestick charts, but they're tick-based candles, and then I've overlaid footprint charts. So that's what I'm looking at these days. If anyone's got any questions, let me know. If you got anything else on your mind, anything beyond this, of course, no big deal. Let me know. Talk about it.
Yeah, for the first time, I checked this one today, and I found it amazing.
Yeah,
But
right.
needs some times to be familiar with.
Yeah. Yeah, it is. It's pretty fascinating what's achievable with these charts. Once you get familiar with them, I think the accuracy of your entries can be really, really good. And then risk management. Just look at this chart here. Let's say you have a level in this area. I do actually, and this thing came from down to up. Where was it? Let's zoom out a bit. No, it came from up to down. All right, key turnaround area.
Mhm.
And let's see, what do we have? Yeah, basically, mostly a downtrend, got into this zone. And over here, you're trying to figure out long or short. And let's see what you can find. Well, if you look at this peak, this one's very obvious. So zoom into it. What you see is, as it was basically chopping around, it did get a little bit bullish. And as it got up here, just looking at these colors, not much more than colors, you can see there's more buying than selling right at the top. And it's a bullish candle, that makes sense. And the next candle near the top of it, lots more buying than selling, massive imbalance. And the candle actually closed down, very bearish. So that's interesting. To me, there's something unusual here. When there's a lot of buyers, a lot more than sellers, the candle should move up, right? The price should move up, but it did not actually close down. That's telling you that as much as the buyers are aggressive hitting market orders, the sellers are even more aggressive on the limit orders, basically. And then once you have this candle close bearish, you're looking for further confirmation for the price to move down. One of the things I like to look at here is these white highlights, which is just telling me the majority of the volume is happening, or the largest volume is happening here, where it's white. You can see it's moving down. Once you're getting that confirmation, you have an entry area for a short. The stop could be right above your little white zones, or just right above where you identified this battle between buyers and sellers. If you catch that entry, then this thing just went, right? Look at that. Pretty interesting. And let's see what we find at this bottom here. Let's say you have a level here. I do have it. Is there something unusual going on down here? Right here, you can see it. There's a massive imbalance. A lot of sellers, not so many buyers, and the candle was bearish. Makes sense. Then over here, you have, look at the bottom here. Look at this imbalance, 58 and 11. A lot of sellers compared to the buyers. Big imbalance. A very bullish candle. And then you can see the white highlights moving up. You may want to enter maybe in this zone, maybe up here somewhere. The stop down there, perhaps. Let's see how that would have worked out. Zoom out of it. And yeah, there you go. It's on its way up. Very interesting. Let's see if this makes sense right here. So this is been in an uptrend. You may be looking at a pullback. Can you identify an entry here? This one happened pretty much exactly on that level. So what you're looking for here is that there's more sellers than buyers, and it goes the other way. And sure enough, right here, more sellers than buyers. Candle pushed up from there. Over here, an even bigger imbalance, more sellers than buyers. The candle went up from there. Over here, twice as many sellers and buyers, and the candle pushed up from here. And you're getting these white rows moving up. There's a lot of indications right here for the price to start going up. So if you get your entry in this zone, the stop below it, and zoom out, see how it went, you're straight up. That's interesting. Let's see where it is right now. Right now, right here, you can see a lot of buyers. Let's see, where do we have it? A lot of buyers here compared to sellers. The candle pushed down from there. What else are we getting? but the white rows have not got moved down. That's your confirmation is not coming, even though you have the setup of what's going on between market orders and limit orders. But the confirmation is really that the price moves down, that the transactions are moving lower and lower. But you're not seeing it actually happen. Again, these white ones here, these white highlights are the highest number of transactions or highest number of this volume contracts traded within the candle. And they're not moving down. So the confirmation is not there to take the short. If you just look at naked candles, you might think it's a reverse hammer and you go short. And so far, I'd say, nope, not yet. But let's see how this works out. If this starts moving down, if we start seeing the white rows moving down, then maybe in the next 10 minutes or so, you might have something. On the other side of it, you know it's really bullish. And so this could be a consolidation and continue upward, right? So you're looking near the bottom of these bullish candles, and you're seeing, look, lots of sellers, not so many buyers, and it kind of moved up. Here, sellers, not so many buyers, but it is a bearish candle. Here again, lots of sellers, not so many buyers, but didn't move up tremendously from here. This one is interesting right here. Lots of sellers, big imbalance between buyers and sellers, right? And the candle moved up. And then if you're getting these white prints moving up, right after that, that's your momentum coming in. You would think of this as bullish. So right now, nothing. Because basically it's chopped. These white prints are just going up and down, right? So no entry. Anyways, that's how I'm reading these things so far. And I think they're fascinating.
And do you believe, Avi, looking just to this chart is enough for entry and risk management, or no?
I think you need to know where to look at the chart. So you got to have levels. Now, to get levels, I'm still using the 30-minute time charts, the candlestick charts.
And
So
what is the time frame for this one?
there's no time frame. These are 1,000 ticks right here.
Okay. Okay.
So 1,000 ticks is 1,000 trades. Once 1,000 trades occurs, the candle closes. So whatever time that is. At the open, the New York Open, every 10 seconds, we'll have a new candle.
You mean
Right now, it'll be every 10 minutes or 15 minutes or so it takes for a candle to close.
so each one is for 1,000 transaction?
Yeah.
Okay.
Okay. 1,000 ticks. So let's go into a smaller one, 100 ticks, and you'll see it move a lot faster. There we go. See a lot more candles closing. You can see it moving faster as well. I think 100 ticks is a really tiny time frame, especially if you're trading the New York Open. Yeah, it's like a 10-second chart. You can't play with it. But again, accuracy is available there. If you look at it here, lots of sellers compared to the buyers. Candle pushed up. You get your entry when the white prints are higher, and you get it there. It stops there, and you start moving up. And it wouldn't have come down.
You are not setting up for imbalances color codes.
Sorry, can you say that again?
No, you are not. Are you not putting out any imbalances to identify the imbalances? Do you put any settings on the color codes?
I haven't, but you can put it on. I think there's an alert that you can put on here. Let's click on this. I think I saw the setting somewhere. Alert. I don't know. Somewhere. Well, you can actually set up alerts on a footprint chart where it alerts you to an imbalance. Where it happens. But I'm more interested in just levels. When the price gets to a certain level, then I'll get alerted and then go look at it. You can spend 10 minutes watching it and see if there's an entry. It's just easier. So there's a 1,000 tick chart. And if you go to the 30-minute chart, again, let's put this on. Yeah, so this is the footprint chart on the 30-minute candles that we are all used to. Here's a 30-minute candle chart. And this is where, as you know, I like to put levels on. So I found these few levels. Where did I find them from? Yeah, right down here. This one you can see where it bounced off a couple times. And that low over there was, I don't know, right there. See that reversal? So very simple, 30-minute chart for levels. You can put alerts on these levels. And when you get alerted, then zoom into the 1,000 tick chart on the footprints and see what you find.
So it will help for more timing on the trades, right?
Sorry for what? For time? Your mic's a little muffled. Struggling to hear what you're saying.
Yeah, it will be helping us for more timing on the trades.
Yeah, basically looking for more accuracy with your entries. And what that does is it allows you to put a tighter stop. And when you have a tight stop, your RVR expands tremendously. What would be a 5-hour trade is suddenly a 10-hour trade. You still have the same targets, but you're able to put in a very tight stop. That's what I'm really trying to achieve here. And then 10-hour trades become a normal thing. You just maintain your risk. Well, instead of 3R, 10R, it works. That's kind of what I'm trying to do here. So, yeah, fun
So what
stuff.
are the settings you are putting on? ATR 14, or it's a normal standard settings on the candles?
Yes, I haven't changed many settings. Let's go into that. So far, all of these settings are pretty much standard. Imbalance, yeah, 300%. That's
300,
normal.
okay.
The stacks, I think it was 3. I changed it to 2. Was it?
Yeah, okay.
No, this is what I have here.
Yeah.
I don't think I have anything else. Oh, I changed. This is buy and sell. Yeah, just leave that. I changed one thing. I forgot. Display. Oh yeah, I put it on profile instead of cluster. So I'll show you what that does. This is interesting. Let's zoom in somewhere where we can see the numbers on the chart. I think profile is just more insightful. So if you watch these candles, you can see you've got bars on left and right, and the width of the bars is reflecting the numbers. But if you go into settings and put it as clusters, you don't get that width. It's just the numbers, and it's just color coded. But putting it into profile, your eyes can catch it a lot easier. You can see right here a lot more sellers and a lot more buyers and sellers. So I like that setting. This one I played with a bit. It just tells you the delta. This may be useful. You can see here delta, a lot more imbalance again, a lot more buyers and sellers. So just one side to look at rather than two. Maybe this is useful. I haven't played with it yet. So that's the one I have in mind. But anyways, easy enough.
The ladder is also more useful. We can see that there is the more volume traded on this side.
Yeah, the ladder. So this would basically highlight where the volume was heavier. Makes sense. Cool, yeah. You can play with these things and see which settings work for you. What I'm curious to see is the stack levels. If I can find a setting where I can reliably get these stacks, then don't have to go hunting for levels on a 30-minute chart, right? So for example, let's zoom out a bit. You'll be able to see it. You can see the price move down in this area, but right here there was a massive imbalance when it got here. An imbalance of much more sellers than buyers. So that, to my eyes, would become a level of potential resistance. Next time it got there, you're thinking, let's see if those sellers are still there. And if they're not, if the buyers are truly overpowering those sellers, then you have an opportunity for a long. So instead of finding levels, just let it come to you. Let the chart put it for you. In that case, it would have given me a level down here, perhaps, or up here, but it did not. So I haven't found a setting. Sorry, I haven't found a setting yet that gives me that. It's interesting. Interesting. Can automate a lot of things here. So anyways, this is just new. I've only been playing with this for like 2 or 3 days. And again, I haven't really gone and put on anything new as far as how to read price action. I have the experience with reading volume and reading the tape and all those things. So I just threw this on the chart and using those skills that I've got. And this is what I've come up with so far. It works. It's quite simple, really. So it's a matter of now creating the trade book, putting the rules in place of what I'm looking for precisely, and then start taking real trades. Anyways, that's what's on my mind. What's on your mind, guys? Anything specific? Anything fun? Other than this beautiful sunrise here in Dubai?
So you are entering after seeing on the imbalances on the level or on the absorption you're seeing on the levels?
Yeah, I'm looking for imbalances.
Okay.
And really what I'm looking for, you got to think of it this way. The market has, we'll think of it as two things. There's limit orders and there's market orders. Limit orders, as we know, they just sit there until the price gets there, then they get executed. But what is it that makes the price move to these limit orders? Well, it's market orders. Market orders are people just buying and selling at whatever price is there right now, whatever's available. Bid and ask, right? Hit the bid, hit the ask. And then so when these market order guys come and they run into these limit orders and they keep hitting their market orders, but they're still not absorbing all those limit orders, that's the moment that I'm looking for, where the limit orders are far more powerful than all the guys hitting the market orders. Very simple. When I see that imbalance, then if I see that imbalance and I see then the momentum go in a direction, then that makes sense. Just like it describes. So down here, for example, or down here, price came all the way down with lots of traders and lots of money hitting the market orders, and they ran into limit orders that were sitting here. And as much as they're hitting the market orders, and you can see that they are because of the volume on it right here. Very simple. Look at that. Lots of sellers, lots of red, right? Lots of sellers, much more than the buyers. Sellers, and they're selling, and when they hit the market sell button, it really should get the price moving down, but it does not. Instead, it moves up. So that is the unusual thing. That's where it's telling me the limit orders were sitting here, and there's so many limit buy orders, so many, that the market players just can't penetrate through that area. And then it moves up, and then the confirmation is I'm looking for the volume to move up, which is these white rows. So that's what I'm looking for, the imbalance between market players and limit players. And the limit players is where the big money is, where the patient traders are. Basically, the big money, the algos, all that stuff. When you have a big fund that needs to buy 1 billion shares of something, they're not going to hit the market order. They're going to hit a limit order and accumulate that over a month or something. Those are the guys you want to go with, right? And they will sit here all year long, or at least all month long, to accumulate at this level. This is the spot, yeah, at this level. Down here, as it gets into this zone, they'll just keep accumulating. And as a short-term trader, you can identify this area, and you might take 2 or 3 or 4 trades in a month going long from here, because it's the same limit players. And you don't always see this on the level 2. I'm watching it and identifying it based on real-time action. There's no level 2 sitting here. The level 2 is very, to me, it's very flaky. Gets spoofed a lot. We all know about that.
But there is.
So these are executed orders, right? Not the waiting orders.
That's right. This is not level 2. This is all purely transactions that have occurred. And to put it in really simple terms, very simple. When you see lots of sell orders, lots of sells being executed, the price should go down. The more selling, the further down the price goes. But it goes the opposite direction. That's an anomaly, right? It's very simple. Once you see that anomaly, especially at a level you have in mind, there you go. You can work with that. And when you have lots of buying, the price should go up. But if it does not and it actually goes down, you have an anomaly of something very unusual going on. And you have an opportunity for a short over there.
There's also a daily level there, no?
I don't know. Is there? I don't know. I just put it on the 30-minute chart and found the
Yeah,
level.
because that was my target when I went short from 68.60. Was it 68.60 when we were looking at it 12 hours ago? Remember?
Probably, yeah, it was probably up here, huh?
Yeah, it was 68.70, and then yeah.
Yeah, that looks like a low.
Started going down.
Yeah, went down, and this level would have come from someplace back. It's probably a daily level. You know what? Let's just look at it.
Yeah, it is. Yeah,
Right.
exactly. It's easier.
Yeah. Oh man, I'm gonna get all mixed up with all these charts. Look at this. What a mess. All right. Still gotta get used to how to zoom into these things. All right. Anyways, that's the level you can see. This is a daily chart, and
Hold
These are
Control
low down.
on your keyboard.
Okay.
and then hover where you want to zoom in.
There?
Just like, yeah, no, just hover.
Oh, just hover. Okay.
And
Like
then you
right
can
there.
use your scroll on your mouse. And
Oh,
it'll zoom in.
Thank you. Oh, I love it, man. I'm telling you, you got to give us a masterclass on how to use this platform. I haven't used the scroll thing on my mouse in years. Wow. Okay, there you go. Daily chart. There's your daily level. Pretty
Yeah.
obvious. And yeah, you slammed into it, so not too
Yeah,
complicated.
that was
So
the
over
level
here,
I was targeting.
yeah. Oh, very good. Thanks. So here, this is interesting. So again, going back to fractal patterns, traumatic levels, it's all here. This daily chart came down and bounced right off of here. So that low, you can think of this as a traumatic level where you have buyers. So you're already thinking of this as a zone of support. And then when the price does get there, you're thinking of it as support. So your only bias is potentially a long from here. And then you go into that footprint chart, and you find those, find that imbalance that we're talking about, and you get your long, and off you go. This looks small, but this is a massive move. You get futures with all the leverage, and you're getting in from here up to here. This is what, for 40 points or so, 50 points. It's a lot. It's a lot of money made with the tight risk.
Yeah, it was about a 10-hour trade today from 68.60 to 67.50 or 51.
Yeah, this whole zone. Again, the R is important because it could be 10R or it could be 5R if you don't have your entry and your stop, especially you don't have your entry in a good accurate place. So yeah, get your good accurate entry, and then 10R is very realistic. It's not unusual. You really can do it. You don't need to go capture gamma on an options chart to get 10R. You can do it right here. So interesting, huh?
So Abby, you are not trading anymore on SPY options?
No, man, there's no liquidity there. Not enough liquidity. I ran into that problem last year. And
That was a good one, right? 682, to 677.
what? On this? Oh, yeah.
On the SPY.
Okay. Yeah, I'm not even looking at that.
All right.
Yeah, the move was good. The move was good. But for SPY options, as you guys saw last year, especially in the first half of last year, I ran into liquidity problems. I just couldn't get enough size for the risk I wanted to put on. There just weren't enough contracts being traded per minute, especially for the day trading perspective. And when I want to get in and out quickly because of the time decay problems, so I basically have moved on from options. Liquidity is here; it's in the futures market. And to begin with, the reason I went to options in the first place back in I think 2023 or 23 was because I was looking for more leverage, more capital efficiency. So options were there, and I used it. Then slowly, bit by bit, I was struggling with liquidity on me and things like Tesla and Apple. Went to the SPY, and then I had to go 0 DTE SPY because that's where the majority of the liquidity is. And even there, eventually, ran into those problems. Where I'd lose 2 or 3 R just on trying to exit the trade, just because of no liquidity. And so I didn't want to do that. Then I'm looking at where can I still get the leverage I'm looking for, where there is liquidity. Turns out that's the futures market. And so now I'm here exploring the futures market. And what I like about the futures market so far, a few different things. One is it's a 23-hour market. There's no restriction on to get out of the trade, anytime soon, which allows me to trade in any time zone. Works for me. And also the style of trading I like to do, where I can sit and hold it for a few hours to get to a big target. That's available. And there's no time decay. You don't have to sit and manage this thing every minute and be worried that the contract's about to expire in a few hours. And if the price action stalls, you just have to exit before you get your target. So all of those options problems are not here. That's what I like. And so far, what I've discovered with the broker I'm using is that the leverage is even more than with options. So that's something to get used to. Again, if you don't know how leverage works, you got to take your time and get used to it, because it does work both ways. It'll blow up an account so fast you don't even know it. So it's very interesting. Very interesting. Futures, it works. At this point, this kind of trading, you can hardly even call it day trading. It's not really day trading if it's like a perpetually open market. It's only closed for 1 hour a day. So it's something beyond day trading. I don't know what you want to call it. Call it hobby trading. I don't know, whatever. But it's something different completely.
I have never tried on futures though. For Canadians, I don't know how we can trade futures from here in American market.
Well, you
It's just like Avi does the same way.
there you go. Candle goes up, candle goes down. That's how you trade.
You just can't do it with Ninja Trader. It's only if you live in Ontario you can do it, but other than that,
Yeah, you gotta find a broker you can use that has futures and check out their margin requirements. Make sure it suits you. And one little trick is use a VPN if you struggle with your location. If you can use a VPN, put it out someplace else, and there you go. People do that all around the world. So try that. There's a few different ways to get around things.
Avi, can you pull up the 30-minute chart?
Yeah, there you go. 30-minute footprint chart on MES.
Can you pull up a normal chart for normal people?
Normal people. Oh, wait, normal people. Here we go.
I'm just kidding. Yeah,
There we
just
go, there we
regular
go.
candle. Yeah, there you go.
Yeah, perfect.
That's what my account balance looks like. It's just
Oh,
going down.
man.
I'm just-
What are you doing? It's okay. The whole market's going down. You're not beating the market. Well, you are
This is my
still
401k. Yeah.
401. Yikes.
we're
Yeah,
beating the
so-
market to the downside.
So the 30-minute obviously broke down and then came back up here and is retesting that low. So would you be looking here for an entry to go short, or because I think you said like the candle before it's too big, room to the left and stuff like that? I don't know.
Yeah. Well, let's get into this one. It's interesting. So it came down, it reversed. Now, the assumption I like to make is the market's going to keep doing what it's doing, okay, until proven otherwise. So most recently, it's been pushing up, and you can see after this big hammer pushing up. And most recently, even more recent than that, is it's choppy. So it's all sideways right now, the last couple of hours. So, but you do know this is a key level, this zone. So let it tell you what it wants to do. It could reverse. This could just be a retest of these previous lows, or it could just continue going up. There's two things that can happen, but for now, it's sideways. I wouldn't touch it. So if you're thinking about moving up, well, you're looking for this to be a good, neat consolidation, then you get the breakout, right, going up. If you're looking for it to go down, you're looking for a continuation setup, which would be a big old reverse hammer, which is nothing more than a continuation of this whole thing. Just like it did here, it came down, went up, you're getting the move down. This went down without that reverse hammer the way I like to see it, but you can see that it did put in that wick with room to the left. It was almost there for the setup. So for now, there are all three possibilities on the table. Well, what is happening now is sideways. The long and the short are both on the table. Wait for the setup to come to you. Wait for the candles to do its thing. And these are 30-minute charts, so every 30 minutes, just come take a quick look at it and see if it's set up. If it hasn't, then just leave it alone. That's how I would do this.
Yeah, I would not go short or long here. Like the short was around 68.60.
Yeah, this was that.
And like I still have half of my position on, so I think it's gonna still go down from here, but it can easily go back to 68.60 and then go down. So like because it's very choppy and it's been going down for so long that it it's been quite traumatic. So it's gonna chop probably, most probably.
Yeah. See, what's interesting is overall momentum, as you said, is firmly downwards. But most recently, we found a massive reversal signal right here with this hammer at a key level. And now it's going back into where it was recently. And if you look at it, it was all choppy in this area. It moved down, but man, it's got wicks on both sides on every candle. So if you're into this going long, that's no fun, man. Trying to manage this choppy action when you got a position on, something I like to avoid. So anyways, yeah, like you said, I don't think it's a good zone to play with, especially right now. I mean, you can see it's telling you it's choppy. It's not going anywhere. These last, 2 candles, 2.5 candles. So leave it alone, wait for it. And again, it could easily go from here, long or short, without giving you a setup. And I think that's the hardest part for everyone, where you're excited about a certain level and trying to find an entry at a level, and then it goes without giving you a setup, and then you end up chasing it. It's going long and you enter somewhere up here, and then you got no risk to reward, bad risk management. So you got to wait and really, even if it gets to a level and it doesn't give you setup and it goes, let it go. And don't change your trade book for the next time that happens. Just leave it. The markets move all the time without giving you a setup, all the time. And all the time also it gives you setup and stops you out. That happens all the time as well. So you just got to realize these things. And this is normal in this business. Losing is very normal. You just got to take it. So it's a tricky game. So I don't really want to marry anything, any positions or any levels or any even setups. Just let the setup happen and then put on the risk and then take off the risk. That's it. The key word is risk. You have to understand what risk means. Risk means there's a real possibility of you losing. Very real possibility, 50-50. So it's very real. Perfect setups often fail. So please get used to that. If you can't handle that, then you got to go get a job where you get paid a salary just for showing up. That's almost a risk-free thing. Government jobs, maybe. I don't know. But this is the opposite of collecting a salary just for showing up. It's actually quite opposite. You show up all the time and lose. Very normal. Yeah, this drop was fun, huh? If you're looking at a consolidation leads to a breakout, lower highs right before the breakout. We were talking about this a few days ago. This was a good one. Going into these target zones right here. Cool. Fun. What else, guys? What else is on your mind? It's a beautiful Friday morning here. Just about getting into the weekend.
I mean, would you please check the gold?
Yeah, gold. Gold, and I've got the 30-minute chart here. I seem to have
And
a
the
level.
footprint chart, please.
All right. 1,000 tick footprint. Oh, come on. This thing is slow. All right. Here we go. 1,000 tick footprint chart. What are we looking at? I should put alerts on. I have no alerts on right now. You guys don't want to hear my alert ringtone. It's Dracula. All right. What do we got? Zoom out a little more and see. So it came from down to up. Pull back if you believe it's consolidating and going up. And right away, my eyes go here. You can see the imbalance. This is interesting, where you have a lot more sellers than buyers, and the candle move up. There you go. And then, so that's your setup complete, the way I like to see it. And then you have the volume moving up. Again, the white rows. So, interesting setup. Let's zoom out a bit and see where. So I don't have a target in mind, but it would be somewhere further out. If I had a target way up there, your entry's here and your stop's down there. You can even be conservative and put it down there. I would say, yeah, in this area would give you a decent stop with this. The entry's here, the confirmations, the setup is there and the confirmation's there. And this thing could run up. It's actually pretty much in that entry area. Let me zoom out more on the 30 and see what we've got. Okay, so let's see. You got obvious resistance up in this area. Yeah. So if you're picking the long here, this area, let's bring it down a bit. There. See that? That would be a target from here up to here. Yeah, there you go. That makes sense. So it's been in an uptrend. It's just done the pullback, and we saw the imbalance between buyers and sellers. I think the entry's all right around here to go up there. Y'all want to take a trade? See how this goes. We're a little bit late on it because the imbalance was, what was the imbalance? Down here. No, where did we find it? I lost it already. I think it was here. Oh man, these charts are all over the place. So the imbalance was down here. The entry would have been a little lower. No, I'm making a mistake. Just got a hot mic. Let's see me get a hot mic. The imbalance is here. And yeah, it's moved up. So the entry would be in this area, I'd say. Pretty much where it is now. You got a tremendous amount of volume here. See this area? All the white highlights? It's all happening here. The most conservative stop would be here. And it's still in the right place. It's coming down, unfortunately. It's not a good indication to go long. Anyways, let's see. Let it come down. Let's see if we find another imbalance. It just pops down, and then you might be able to get a better entry. But yeah, overall, it seems long from the most recent activity that's down here. And that's just a continuation of the trend. And it's happening all at an interesting level in an area that I'm interested in.
I think we need a strong bounce here.
Mm-hmm.
It's looking iffy right now to me. I don't know.
Yeah. And this is actually right now on this candle, this previous candle, it's very bearish. You can see the sellers were more than the buyers right here at the bottom. And the candle moved down, so it makes sense. It should move down, right? Because there's more sellers. But overall, you can see the delta here. There's more buyers than sellers. So a little bit contrary. And when it's contrary, it means it's choppy. Let's see what happened up here. Oh, this is interesting. You had more buyers and sellers, and it moved down. So if you took that entry long, this is a bit of a red flag for you to de-risk and bringing the stop tighter. Because this is telling you, yeah, the buyers were here pushing it up, but not able to continue. Right here, you can see that. So you would bring in your stop and maybe take a break even or a half-hour stop or something. Risk management. Looking further back, we know it came from down to up, and let's see if this is looking for a short near the top here. You don't have much going on. There's nothing here unusual. There's more sellers and buyers, and it pushed down. That's okay. It's nothing unusual. You're looking for these anomalies, and I see the anomaly down here. Let's see what this one does. You can see it's decently balanced, right? Buyers and sellers, not much going on. This is the big area further down. Right here. So it's pushed up from here, but nothing unusual. There's a few more buyers than sellers, just mildly down here, and it's pushed up. So again, nothing unusual. Normal behavior. What that means is the market's just doing what it's doing, but basically choppy. So, again, like I said, the setup was here. When you have this candle close, you have more sellers than buyers, and the candle moved up, great. But then you want a continued move up, and that's the confirmation I look for. This one moved up tremendously with the volume, and the next one just struggled. So it wasn't a smooth move up, right? You may have entered here with a stop down there, and then after you saw this indication here where the buyers were there but unable to go, you may prematurely close this one. I think that's good risk management. You might even get a tiny profit out of it. That's your big red flag right up here. So what do we have? This is decently balanced. I mean, there's not a lot of trouble on this candle. The next one, what do we have? So far, I'm balanced down here, but you got to wait for the candles to close to really read it, because it could easily move around. Again, I like this, the slow pace of it. You don't really read live candles. Just let it sit, let it close, and then read it. That's when all the information is complete. So let's see. Again, this is becoming an interesting area down here, right? Lots of sellers. And sure enough, pushing down a bit. Let's see. Again, by sellers and buyers, I mean market players, guys hitting the market order button, right? Or algos or funds or whatever, hitting market orders, using market orders. Not interested in the limit orders. They show themselves anyway. It's the market orders that makes the market move. This is a high volume area. Right here. You can see all these white highlights.
I think if it bounces here, it can easily go to 5,000.
It's going to 10,000, man. This is gold, especially if we have an Iran invasion and all that stuff. Oh yeah. Buy it, bury it under your house. Long term, gold long term makes sense. But yes, 5,000 is a very realistic thing from here. I think it was there just recently, right? A couple days ago.
Yeah.
Yeah. So we have a lot of movement here. I mean, on gold, silver, oil. These are the sectors on the move these days with the geopolitics. It doesn't mean you have to have news on it every day. We just know generally it's in the news. That's all you need to know. And then watch the price action. So the last, what, 1 month or so, you'd have lots of opportunities on it. All right, what do we get? Getting
Now we're seeing a bounce.
yes, we are, and we're seeing it with the buyers are there, the buyers are there, the buyers are there, yeah. Except here, there's more sellers than buyers, which is interesting. You can see it from here. This was your anomaly. It seems like the anomaly moved up a little because you're seeing more sellers than buyers where there's the majority of the transactions right here near the bottom of this candle. If it closes positive, you can have that. But really, I like to see it near absolute bottom, like right down there. But it's there. It's not ideal. Another thing to keep in mind is at the moment, there is no room to the left. So down here, you see the wick of this candle is down here. There is room to the left here. But right now here, yeah, tricky. I would have loved to have seen this come down and do all that, then go up. So no room to the left makes it very complicated. Up here, there is room to the left. So if you identify the short up here, you may look at this. So again, this has that unusual activity in it, but it's not convincing me. Unusual, I mean, there's more sellers than buyers, but then it moved up. But really, we're very zoomed in. Zoom out a little bit, and you'll see that. Yeah, this is just a mess. So, still not so interested. Now look at this. This one just highlighted. This is the, what do you call it? The stack, I believe. I'm not sure how they calculate this, but this is telling you that right here, there's an imbalance. There's more sellers than buyers by 300% or something, or whatever the number is. And it's an area to look at. But again, I think we're way too zoomed in over here to be able to put risk on. Over here would have made some sense, but the continuation didn't quite happen. Now it's just choppy. So again, this is most of trading. 95% of trading is watching it almost set up and then don't take it. You know, just because that's just how the market is. It's not most of the time it doesn't give you a setup. So there you go. There's gold. Keep an eye on it. You never know what you find. What else, guys? What else you want to talk about today? There we go. We're getting that movement. So we had the unusual activity, slight movement up. Seems like that continuation. A fun point would be, yeah, break and retest up in this area. You still get plenty of room to go if you can get the entry nice and tight. Still got it. You guys see this pattern here, just on candlesticks? It's bullish, and then you have this pennant. You're getting lower highs and higher lows. The price is basically compressing.
Yep.
Yeah. So this is where you don't touch it. Wait for it to complete and really compress, and then you get explosive. And with these pennants, man, I've never been able to gauge direction until after it happens. It either breaks upside or downside. I don't know. So be careful with these things.
I think I'd be interested in this after 48.60.
Hmm.
If it goes there and breaks, that's
Yeah.
what I want to be.
Yeah, that makes sense. You can see it right up here. This was the top, and at this top, it was pretty obvious. There were a lot of sellers coming into the market, but pushed down. And push down, as in sellers can't push down. So there's lots of selling happening here. Basically, just look at the pattern. So yeah, break and retest ideally up here. You have something. It's a bit of a no-go zone right now. This would have been the most interesting point to take the long, and if it continued, great. But again, your red flag was here, and take off the position. Cool. Now, guys, you can use these footprint charts on all the tickers you guys like to trade, AMD and Tesla and Nvidia and whatever. It's all there. It's all available. You can use them on time charts. I'm using tick charts, but you can use them on time charts on all those tickers too. It's all the same. I just think it's really insightful to get these entries. I think specifically more for reversals. They seem to be very powerful at key levels. So I'm using them on futures. Doesn't mean you can't use them anywhere else. And also, there are all kinds of platforms that have them. The Sierra charts and ATAS, and I don't even know. There's so many. This one is just TradingView for now.
Sorry, Avi, I joined late. Is there any tutorial or anything you suggest for understanding this thing, this chart?
Yeah, this is the tutorial. You're right in the middle of it right now.
Oh, okay. So maybe I will once you post it, I will see it again.
Yeah, no worries. Listen, tutorial. All I've done is look at the TradingView YouTube channel, which told me nothing more than what the settings mean, and I've thrown those settings on the chart here. Other than that, I'm just using what I know about reading price action, which is how do buyers and sellers interact, how do market orders and limit orders interact, how levels work, what is room to the left, and candlestick patterns, what are tick charts versus time charts. So just using all that experience that I've got, I'm just applying it here on this chart, just letting instincts take over at this point. That's it really. Not a whole lot to it. So yeah, anyways, all these sessions are recorded and I'll post it up. You can take a look. And again, there's no wrong way to use it. I'm just using it my way. So the more you explore things, the more you get screen time and watch the markets move and look at these details, and the more your curiosity takes hold of you, the more you'll uncover all kinds of interesting ways to use it. And again, nothing wrong with independent thinking and finding your own way, rather than just the latest, most viral video on YouTube. It's more important to find your own way than just following some dummy influencer.
Yeah, sure, makes sense. I want to explore this.
Yeah.
So do you believe that TradingView, like NinjaTrader, is better than TradingView in terms of this footprint chart?
I have not used the footprint charts on TradingView. Oh, sorry, on Ninja. It takes about 5 minutes to set up, it seems. The one thing about these charting platforms, between Ninja and TradingView, I like TradingView. It's smoother and easier, and much more intuitive, at least for me, because I don't like to spend a lot of time on settings and figuring things out. It should just be intuitive. So TradingView has that, and for me personally, I like it because I can use it on my phone. And NinjaTrader on the phone is just no fun. So it's simple on the phone now. If I'm somewhere out in the middle of the day and I get an alert, I've noticed I can read these footprint charts on the phone as they happen and put on positions. So that's to me, that's a big bonus because it's a 23-hour market. I'm not going to sit here all day in front of the screen waiting for an alert. No way. Yeah, I might be windsurfing offshore and then I get an alert. No, I'll stop windsurfing, put on a trade, and continue. How about that? No problem. There you go. Lower highs and leading to a breakdown. Now let's see if we can catch breakouts using these charts. So you had lots of sellers overpowering the buyers right there. A tremendous amount, and sure enough, the price broke down aggressively. We saw that move. So there you go. If you like to catch breakdowns in real time or breakouts in real time, there it is. Some new lows, breakout out of the choppy zone. You can see the support area approximately there. And there's your continuation, it seems. You're getting the transactions happening a bit lower. Personally, you know how I like to do it. Wait for it to really go, come back and retest. So let's see, was there an indication? Well, the indication was simple one, lower highs leading to the breakdown. And actually before that, like we were saying earlier, the top, where the hell was it? The top here, I think? Yeah, this top here was key because what you're seeing here at this top, significantly more buyers than sellers. And so if you have more buyers, the price should move up, but it did not move down, even continued down. So here's your indication. If you like enter there and then you're getting the breakdown, here's more of an indication. So far, everything's pointing to the downside.
Yeah, also that one, the top was lower than the previous top. That's what I didn't like about that either.
Yeah, absolutely. Again, just simple candlestick patterns that we've used for years. Lower highs, right? And here in this case, lower lows as well. So you're beginning to see the start of a downtrend. So again, nothing unusual. We all know these patterns, use them all the time. So let's see now here. See if we can identify a retest perhaps. So it broke down with more sellers than buyers, which is good. This is interesting with more sellers than buyers, but it pushed up. Now let's see. So this is your mild anomaly right here. What do we have? Decent balance so far. Yeah, the candle still opens. You want to wait for it to close. You can see where these white lines are right here. So every candle has these white arrows from the left to the right. This is telling you that this is where 70% of the volume occurred on the candle, on this particular candle. It was right here in this area. On this candle, it was here and lower. 70% of the volume was in this zone right here. Right now it's tightening. It seems to be right here, but let's see. You know, the fun is in catching these breakouts before they happen. Those lower highs is a good indication. I've used those before, but when I got into naked trading, I stopped using that. I wait for the break and retest. But now using these charts, you know, maybe there's a way to catch these, which effectively, most of the time, you're just catching reversals, depending on the perspective. Mostly when you zoom in, it all looks like a reversal. So it's a bit of a mindset shift. You can see, you know, a lot of transactions taking place right where it is now, not really moving. So wait and see. What's interesting is here you had more sellers than buyers. The candle, since then, it's been pushing down right there. And this candle closed all bearish. So there you have the retest zone, I would say. Here's your breakout. The retest seems to have happened here. And what I would want to see also is that these white prints are moving down steadily. That's telling you that the trend is in place. But as we all know, breakout zones are very tricky. You guys all know it, right? You get stopped out half the time, fake out, fake breaks, all that. So catching breakouts is a tricky situation. So catch the retest or find ways to identify it before it happens. Retest makes sense if you're using naked charts. And by the way, this is far from naked charts. This is the opposite, man. These are complex, much more complex than anything I've used recently. Let's see. So there's a balance here. When you have a balance, basically the price is not going to go anywhere. You can see buyers and sellers, there's not too much difference. You know what? Let's change the setting real quick and see if we can do it this way. There we go. All right. So here I see a lot more sellers than buyers. That's why it's negative. It's red, but it moved up. So there's your mild anomaly. Not massive differences here. -8, 0, 12. So decently balanced up in this zone for now. Down here, you had more sellers than buyers, more sellers than buyers. So it should have moved down if you're getting more sellers than buyers, but it did not. So this is an area you want to be careful of. Right here. Perhaps to catch the retest of this breakout, wait for it to break lower here. If it breaks that support, maybe there's your idea to catch the move down. You can see this is really not turning out to be a convincing breakdown, is it? Oh, look at that. The sun's up now. Cool. Lots of volume happening up here, more buyers and sellers. The number is positive. And so ideally you're thinking it's going to move up. That would be normal. Up here you have more sellers and buyers at the very top. Majority of the volume was buyers, and up here you had more sellers. You can see it's getting messy, right?
I don't trust it.
Yeah, exactly. Yeah, I don't trust it either. It just had one break aggressively, and then the retest has not happened. The sellers are not able to sustain that break. So zooming out now, once again, we are right back where we started. It's pretty choppy. And the only way I would identify the short is perhaps this anomaly up here. Get your short in this area to stop above it and just let it do its thing. Keep trending down slowly. Simple way to catch it. Again, that would just be catching a reversal. If you're looking at footprint charts, my eyes tend to go more into looking at reversals than anything else because you're just looking at anomalies. Something should happen, but the numbers came out all opposite. And the candle moved the other way, so okay, that's a reversal. So there you go, no entry on this. And again, this is 95% of trading, sitting and watching it almost set up, and then it doesn't set up, and then you don't touch it. Then you get frustrated, and you should go away rather than keep watching it, right? Here's your typical mistakes in your first 5 years of trading, getting frustrated. What are you laughing at? You've been trading longer than I have. 10 years, man.
Yeah.
Shit, man. I'm coming up on 10 years now, trading the markets. I still get frustrated all the time. Can you believe it? Coming up on 10 years and I'm sim trading. You guys are all getting upset. 3 years, you're still in the sim. Oh, shit. Come on.
I'm in the sim. I mean, I'm back in the sim.
Back in the sim, yeah. Yeah, nothing wrong with going back in the
to
sim.
jail.
Yeah,
Jail.
the sim is back in sim.
Good. I am as well. And, the sim is not just for the first couple of years of trading. You're just trying to figure out how things work. It's It's very useful at various stages in your trading journey. I traded live for so many years, and I got into some really heavy trades and big sizes, and now I'm right back in the sim, just because I'm trying to explore something new. So, it's very useful. Very useful as sim trade. There's no shame in it. Whatever you got to do to improve your trading, focus on that. Just do that, and forget
Yeah,
about what things there.
I agree with that because like I had like a losing streak, and I was like, man, let me just go back to the sim, and then went to the sim, and I was just, I mean, just the best trader to ever press a button, and I was like, what the hell is going on, man? And I
Yeah.
realized it's not the technicals. I'm journaling all the technicals and the charts and all that stuff, and it's not even the problem. The problem is the emotions involved with the trading. So it's good to like step back and go into the sim so you can realize like, hey, you're not doing anything wrong technically wise. Like you're trading, completely fine, but you're just completely detached from the money and when you're doing the sim compared to when you have money in the line. So it was a good eye opener just to kind of like start journaling my emotions instead of my charts.
Yes, that's a good way to put it. Thanks for sharing that. For most people, that's exactly what it is. It's an emotional thing, but most people are in denial and then run straight to the charts and technicals and start creating new strategies and all that stuff. It's not that. It's always the human nature side of things, the emotions, the managing losses, the frustration, the revenge trading. How do you go through a losing streak without blowing up yourself rather than, forget about blowing up an account, you blow up yourself. Those sorts of things. It's always the human nature stuff. So yeah, thanks for sharing that, man. That's going to be useful for everybody. Trading
Yeah,
is
man.
99%. I'm telling you, it's 90 or 99%. It's all about the human. All this technical stuff. I mean, this is easy. It's not complicated to understand. You spend a few days just looking at new candlesticks and how market buyers interact with market sellers and all that stuff. It's not difficult. Everyone here can figure this out. It's just the emotional intelligence side of things. Always is. So yeah, take care of that. The sim is a great tool for that. You don't need to go out buying new programs and training programs or weekend crash courses, all that stuff. These are all predators out there selling you this junk because they know you're jumping around, you're losing money, and you're jumping around in strategy, so they'll sell you something. Very easy. You're very vulnerable in that stage, right? In that phase. And traders are always in that stage. So lots of predators.
Yeah, they feed on desperate people,
Yeah, exactly.
It's the
And it's nothing,
desperation.
yes, it is. And really, it's nothing more than the same old repackaged garbage. If you've seen it, you already bought it before a year ago, 2 years ago. They repackage it on a new website, new name. It's the same people behind it. It's the same stuff they're going to share with you. Just under a new logo, wear a different color suit. That's about it. So don't fall for that. Please don't fall for that. I did. I fell for all that shit. I even helped sell that stuff. Oof, what a mess. So no, you don't need all that. I think it's all rubbish. What's important is just paying attention to yourself.
What's
Grow.
the story of the fallout with BBT?
BBT. Well, to put it in very simple words, my trading and my way of helping people learn how to trade got too big and too effective to be in BBT, to be contained within BBT. It became difficult for them to sell their programs. And even for the lead trader in there, it became very difficult to accept that there's someone else in the group who trades much better than he does with bigger P&Ls and all that. So in simple words, that's what happened.
The story as old as the world.
Yeah, and we've all seen this. Nothing unusual, really. That's what it is.
Human nature.
Yeah. Basically, I just got too big for it. Way too big. And I could see all the rubbish. It's just one big circus, really. Yeah. Man, that's all you guys in here, man. A lot of you were there. Most of you have canceled your BBT subscriptions after showing up in here, right? So there you go. They didn't like that.
I have a lifetime subscription. Anybody wants it?
I have
I
mine too.
also
Like,
have it. I also have it.
there you go.
Whenever, sometimes, if I go there just to check their watch list, I make sure that right at 5 minutes before, I just close that. I don't know, I mean, energy is something different. I just go there, watch, see what people are, looking if I've missed something, and just I close it.
I guess
Yep.
only Thor makes sense in whole of the group.
Yeah.
Yep. Yeah, it's a different world over there.
Yeah, he's in love with his own Camarilla pivot plays and all that. But it works
Yeah.
for him, right? So it's good.
Well, think of it this way. You got a mountain of information and courses and webinars or whatever. Out of that, what percentage of traders in there are actually genuinely making a living out of trading? And there's a book written on that, apparently. Very few. Very, very few. Almost no one in there. Not even the guys who are on the microphone. So that was the one odd one there who was actually doing it. One of the few. So
Yeah, I was watching you when you in Paris used to come around 10:30,
yeah.
and I used to see your trades, man. Absolutely different from everybody.
Yeah.
So from then point on, I used to watch all free content, and then end up here.
Cool. Well, welcome here. This is where we
This
trade.
This thing keeps looking bearish to me.
Yeah, lower highs. Very simple. Lower highs. And you're beginning to get lower lows. So there's no way I would think about bullish activity here. Trying to find an entry like we would have found up here, maybe. So, oh, here we go. Here's an anomaly. A lot more buyers than sellers, and it didn't push up. Instead, the next bit of action has been pushing down. So there you go. If you have the bearish bias, you may think about this area for an entry. There's that. Sorry, I didn't pay attention to the chat here. What do we got? Makes sense. Carl, you canceled your subscription there. What are you writing here? Amal, the way the emails come out is just based on fear. People fall for fear. Yeah, that's it. That's how sales works, man, especially in the trading industry. Everyone's terrified of the market, except in the very beginning. Everyone's excited. But then a couple of live trading days and you lose some money and it's all fear. And then all the emails come out, fear mongering. Buy this, you'll become a trader. Buy this, it'll solve your fear problem. Buy this. And you'll figure out why you're failing. Why do you think I don't run an email newsletter? I don't want to be a part of all that. I don't believe in it. Don't need to. Don't want to. And the truth is, I don't want to run a trading business. What do you call that? Some sort of trading programs and subscriptions. And oh my God, that's just basically hustling on the internet. I didn't get into trading so I can go hustle on the internet. I got into trading so I can have freedom. And hustling on the internet is the opposite of freedom. Right? Now I have freedom. I have financial freedom. I have time freedom. All that. It's very simple. So there you go. That's most of the trading industry. It's all like that. That group's not the only one. There's plenty out there. Plenty garbage out there. So there you go. This thing is firmly bearish. It's a new low. You'll get another lower low. So for me on this one, I think the real key point was here, where you have that massive imbalance. You can see just looking at it, it's green. Lots more buyers and sellers, and it's pushed down. So there's your point. And then you're just thinking bearish because it's lower highs at a key zone. And then anytime you're seeing it push up and with the buyers unable to make a new high. There's more buyers than sellers, like right here, unable to make a new high. Over here, because the number is positive, not negative, so there's more buyers than sellers. And unable to make a new high, instead making a new low, there's your entry zone again. Same thing here, again. So the idea of a long, where we looked at it initially, was, I think, here. Can't remember. I think here. Yeah, this looks like it. And got there, and they gave you the red flag. Don't go long. From there on, you've had a few opportunities to think about a short. And let's zoom out. Let's see what can happen. Oh, and here's a target zone. You can see this highlight. This is where there was a massive imbalance between buyers and sellers, a lot more buyers than sellers. So if you're getting the short, the target zone, I'd put some partials over here, and then the rest, majority probably here, or just half of it here and half of it here. Maybe leave a little more to run down if it wants to. And that would be your whole day today. What time is it? It's what, 10:30 p.m. Eastern. I mean, the market's open for another 20 hours, or I don't know how long. You can leave it, just leave it the whole day. No big deal. On the futures contracts, right? So a fun way to trade. And this is hardly day trading. This is something much, much, much bigger. Day trading, you talk about when the New York session is open. That's only, what, 6 hours or so. This is bigger, much bigger. Close to position trading or swing trading. I don't even know the difference. Whatever. Anyways, all this stuff. We should give this a name, huh? Somebody come up with a name. Aviator trading or some nonsense.
What are we naming?
This style of trading where you just kind of have a 23-hour market. So you're not really day trading. It's almost perpetually open. There's swing trading, there's position trading, there's investing, there's day trading, there's scalping. I don't know what. All of them overlap anyway. So, whatever. Doesn't even matter.
Do you think you're gonna have positions open for 3-4 days in a row with this style of trading?
The only way I'll do that is, the way I can see it happening is when the market closes at 5 p.m. Eastern, I'll have to close the position and then reopen it when the market opens at 6 p.m. Eastern, if the price is still in the same place. If there's a massive jump or a gap, then the whole thing is invalid. I see myself doing that. But for me, that's like 3 a.m., 4 a.m., So usually I'm not around at that time.
But if you were in the position long, like basically if your entry is far away from where it's closing at 5 p.m., would you close the position?
Yeah.
If it's going in your favor.
Yeah, and it didn't get to the target yet. Yeah, I'd have to close it because the margin requirements become 10 times as big when the market's closed.
Oh, right.
So it's just for that capital efficiency side of things. If I'm using a $100,000 account for that trade, for that 1 hour, I'd have to maintain $1 million in the account just to keep that position. Makes no sense. It's the opposite of what I'm trying to do here. So I don't see myself doing that. What would be cool, and I haven't found a way to do it, is find some sort of, or create some sort of automated way to close the position and wait for it to open, and the automation would see if the price is still within that zone where it closed and put it back on with the stops and targets. I'm sure there's a way to figure that one out. Again, I'm not very tech savvy or not a coder and all that, so I don't know. But I figure that can be created, right?
You can probably do it in TradingView.
You can do it in TradingView?
Yeah, I have no background in coding. If you just go to ChatGPT and just ask it to do it, it'll script it for you.
AI scares the heck out of me, man.
I know, man.
I don't know GPT. I've never used ChatGPT. I think once I looked at it. Shit. I don't know. But if any of you guys are using it, want to figure that out, let me know. Oh, man.
Did you hear about the Anthropic AI? These guys came up with some new plugins, and this whole software industry is going bizarre, and like they lost so 35 billion in last 2 days.
Really? I have no idea, man. I'm not up to date with any of this.
I was checking the plugins, these guys, and it's actually everything they have, like be it project management. Obviously, software field coding is like the simplest of all, but now they have all the legal contracts, all database management, all the ticket management. For everything they have, it's actually impressive.
Wow. Yeah, I mean, I can see the efficiency side of things for business owners. Makes sense. But I don't know, man. It's a double-edged sword, it seems. Again, I don't have any experience with AI. I hardly ever look at it, hardly ever use it. I use one little thing just to help with these YouTube shorts, just chops up these sessions into shorts. That's about it. That's my entire experience with AI. But yeah, it seems pretty scary for a lot of industries.
It is very scary.
Yeah. Hard to trust these things. Of course, Hollywood has told us to be afraid of it through the Terminator movies and all that. But
Matrix.
yeah, the Matrix. That's my favorite. We're all Matrix. Gosh, we've had so many conversations about that in here.
Right now, it's getting scarier than Terminator because a lot of people are going to lose their jobs. It's basically worse than dying right now.
Mm-hmm. Yeah. So here's the fun part. As far as trading is concerned, I've been seeing a lot of ads about, or these ads come to me, I guess, about use AI for trading, and it'll just take a screenshot, or you give it a screenshot and it'll tell you where to enter and exit, or when to enter and exit, and what direction. Oh my goodness. You pay this thing like $1 a month, download the app.
It won't work.
Yeah. I saw it. I'm like, no, thank you. I don't want to even know how this works. If it, whatever scam this is, I don't want to be a part of it. So, no. Lots of trouble. What's going on here in the chat? We got Mohit, you're out. Alrighty. Amal, you're short. MNQ. MNQ. All right, we'll look at that. Amal, what do you say? Layoff coming. Should learn trading. Oh, there you go, Amal. Yeah, it's talking about the fear mongering that's going around, the day trading people on the internet trying to sell stuff. AI is coming. You're gonna lose your job. Here's a 50% discount to my day trading course. Buy it now. Yeah, see this all the time, right? These days, fear mongering. I mean, the key is with AI taking over jobs, then the key is how do you make yourself useful and valuable? Well, one thing is get behind AI, as in be an AI manager, coder, whatever it takes to build out AI, all these sorts of things. Servers, I guess. I don't know. On the other side of it, don't go with it and look what AI cannot do, or it's not proven to do, which to me is dealing with the financial markets. Most human beings haven't even been able to figure it out for 1,000 years. So we figure it out, read price action, and it's incredibly complex, right? When you really look at the details and nuances, every buyer, every seller, learn that skill. I think the skill is all right. Here, okay, so MNQ list, you had support here, breakdown, retest, sure enough, all the way down, came right back up to this area, and it's continuing to push lower. So this short makes sense in this perspective. I'm just looking at the 1,000-tick chart. And it's doing similar things to gold, right? Lower highs gives you an indication that the sellers are in charge. Right now pushing up, but as long as it doesn't make a higher high, I think the downtrend is still valid. And it's a very tough one because it's, lots of heavy pullbacks on this trend. Kind of like here, if you were in the downtrend, you would struggle when it did these pullbacks, but really these are lower highs, so the trend is intact.
I'm looking at the channel there, and I think if the channel breaks, then I could go short.
What are you talking about here? Down here?
Yeah, if you draw two
Uh,
trend lines on top and the bottom, you
like,
can see the channel, and I think
this?
once the channel breaks, then you can go short or long, whatever,
Okay.
whichever
Yeah.
way it breaks.
Okay. Yeah, these channels are something that I have not used much over the years. I like just horizontal lines, but it makes sense. Makes sense. Lower highs and lower lows. That's a trend. Yeah, if you like channel breaks. Personally, again, if I was looking at this, I would look more, if I'm identifying firmly a downtrend, so I have the short bias, then I would, these days, most likely go into the footprint chart, see if I can find an anomaly where there's a lot of buyers, but the price went down. And that would be an entry. So let's see what we have at these peaks. Most recently right here, a lot of buyers, much more than sellers, and the price went down. There's your entry. Well, that's the setup, and the entry would be as the price continues down. And the stop above it, so far, it wouldn't have got you yet. And if it does make a new high, you don't want to be in it, so that's where your stop should be. And the downtrend's over. As long as it does not make a new high, it just keeps going down. I think that would work. That's how I would do it. Let's see in this area what happened. Over here, this candle, I don't see it because I'm seeing. Oh no, wait a sec here. You know what? Let's go back. I can't read this chart. Let's go change the settings. Buy and sell. There you go. Makes it easier. At least I can see it over here. See right at the top, you have significantly more buyers than sellers, and the candle went down. Then the further moves down, that's your entry zone with a stop above it. That makes sense. But first things first, you want to have the short bias. You think this is an area where it's short, then you can start to look for these sorts of things. Same thing here. This one's a bigger one. Price pushed up, and right up here, lots of buyers came in, more than sellers, but then the candle went down. And you enter as it continues down, the momentum's moving down. You stop above those buyers that were attempting to push up. And there you go. And this thing is just kind of moving, grinding. So again, looking for these anomalies, I think you can get really interesting entries.
Yeah, this looks interesting.
Yeah, it's a very effective way of looking at these charts. You can really, again, my whole purpose is to find ways to get tight entries. And by tight entries, I mean where I can put in a stop loss very close to the entry, which then expands the RVR. Like I've been saying for years, for me, the only way to make money in the market is to make sure your winners are bigger than your losers, which comes down to RVR in your trading. You want 5R, 10R, 20R kind of trades, not 2 and 3 and 4R trades. That's it's not going to get you too far. So to do that, there's two sides of the equation. One is the reward, the other is the risk. So if you control the risk side, then that's what I'm really looking at here. Try and tighten up the risk side. Put those stops in very tight, which means you have to have a very accurate kind of entry. And that just naturally expands the ratio. I think these footprint charts provide some of those opportunities. So that's why I'm taking the time to figure this out before I put on some real risk. See what happened at the bottom here. If you had a level here or an alert or something, would you catch this reversal? This happened to be the absolute bottom. Yep, and there it is. You can see it right there. Pretty obvious. Lots of sellers compared to the buyers, and it did not go down. The next one, even twice as many sellers as buyers, and the candle went up. And then continued volume up. So entry perhaps in the zone, stop below it. And what would have happened? There you go. That's another $1 million right there. And in this situation, if you caught that long, here's an obvious target. This is the highlight telling you there were a lot of sellers here previously. So you take a whole lot of it off. And if you're able to identify imbalances, maybe add it back on, and then bring the break even would be here. Ideally, if you can keep it here, great. If your new break even's up here, then you get the stop out. But from here to here, that's already a massive move, you know. Then you can maybe identify a new setup. Down here, go long. Down here, go long, just like you did down here. So I think this is really interesting for reversals. So far, my eyes are going straight to reversals more than anything else.
So
You
do
gotta
you see this anomalies only at the bottom, or I think, do you see this anomalies? Like, my good thing is how can we be sure that this is an anomaly and then it will go
Well,
up?
see, anomalies are basically something unusual happening. And just think about any market, not just stock market, but just a market, buyers and sellers, right? If there's more sellers than buyers, the price should go down. So now if you see a lot more sellers coming in and the price does not go down and instead it goes up, there's something very unusual going on.
Yeah.
Right? That's an anomaly. So the setup is that there's more sellers than buyers and the price went up. And then the confirmation to really put the risk on is the price continues to move up. So you're looking at momentum, you're looking at more volume, higher and higher. So again, on a candlestick chart, that's where I say enter on the new 1 minute high or the 30-minute high. Then you have a chance for this sort of thing. So you have two things. You have setup and then confirmation of the setup. The confirmation is when you put the risk on. Let's see, we've been looking at reversals, but like right here, there may be a breakout. Let's see if we can identify how to catch breakouts using this information. So it's obviously, you can see it's been in an uptrend, and then, this chart's getting very noisy. You gotta figure this out. It's been moving up, but then in these candles, it's slightly making new highs, but more than anything else, these candles are overlapping. And then the breakout happens here. How do you identify the breakout happening here or even the retest? Let's see. Well, when the candle closes, it's hard to read a candle when it's open, but when it closes, you can see it printed significantly higher. This was the resistance zone, and then it went from there. And it went, you want significantly more buyers and sellers, and you get that right here. You can see it. The delta also is very positive, significantly more buyers and sellers. The whole right side is bigger than the left side, all the numbers. So that makes sense. Makes a lot of sense. You need significant buyers to break through resistance and really go. And then for the retest, you want it to come back and you want to see that the buyers are still there in that area. This candle, don't see it. In this candle, I don't see it. At the bottom here, let me think. No, I don't see it. To identify a retest, you want it to be here, but I don't see it. I don't see the retest area. But let me think. If you put it on, if you see this as a breakout, and you get, once this candle closes, you just enter the next candle, whatever it is, and you put your stop below it, below where the major buyers were. You're not bothered about a retest, just waiting for this thing to close. That could be one way. So I'm not able to identify the retest here. Or, sorry, on another side of it, a retest also in a very micro picture is actually a reversal. Think of it that way. So this candle came down at the bottom, more sellers than buyers, and it didn't continue down. And sure enough, next one went up, even with more sellers than buyers. So there's your retest complete. You can look at it that way. It's a micro reversal right here. So here's your breakout with the big buyers stepping in all the way up. And then here's your pullback. And at the bottom, with more sellers and buyers, it still goes up, as in this one goes up. There's your retest complete. So there you go. That's one way to do it. And off you go, catching a breakout and a retest of it. And you're in this. So this would have been here, right in this area. Your entry is somewhere here. And you find a target. So there you go. That's how we could look at breakouts and retests. Does that make sense?
Yeah, I mean, it makes sense, but then like this is something this is your strategy already, right? I mean, it should do a breakout and then do a retest. I mean, this is just more confirmation, right?
This is something I made up in the last 30 seconds.
Yeah.
I don't know. I don't know. I'm just looking at this in the last few days. Last 3 days, I've been starting to look at this chart. And I'm trying to figure out ways to read it. And so far, this is what I'm finding. Just looking at how buyers and sellers are interacting with each other using the structure that I've always used, which is, consolidation, breakout, retest, trend, all that stuff. So yeah, just applying that structure that we all know about onto how are buyers and sellers really interacting inside these candles, as in how are the market orders and limit orders interacting. And it's when those limit orders are more powerful than the market orders, that's when I believe that's when you have an opportunity to get into a move. So that's what I'm really working on here. But anyways, think about it, read it, or look at these charts and see if you find something. I mean, everyone has different eyes. You'll definitely see something that I'm not seeing. And then you can share it with us. We can all grow with this, learn this stuff.
Yeah, but this definitely looks interesting.
Yeah. I think it is very interesting. I think there's a lot of potential here. A lot of people talk about a lot of the internet says, well, professional traders use tick charts and footprint charts and all these more sophisticated things. And only then do you make 8 figures in trading. Well, I made multiple 8 figures on candlestick charts. Now let's see how much bigger we can go with this. And that's my whole thinking. I'm just trying to make my trading bigger and bigger.
10 figure now.
Yeah, let's go. No problem. We'll all be trading on a yacht pretty soon, all of us together. That'd be fun.
in.
A yacht, not too big, a good one. We can fit on like maybe a $50 million yacht. It's not too big. It's okay. And we can sail around the world.
Yeah.
It's a good way to go. You don't have to deal with the world's problems. When there's COVID, you won't even know about it. You're out in the middle of the Pacific Ocean somewhere. But it's good to dream. But you got to stay grounded and stay focused.
So gold broke that channel.
Oh, it did? Where is it?
I think it did, but my data is delayed. So
Okay. Let's look at this. What were we saying on gold earlier? I think we were looking at the short, or it was choppy, and then potential short opportunities. Well, again, lower highs, lower lows so far. Same thing as we were looking at, what was it, M and Q, I think. It's all happening in a zone that makes sense. Let's look at the most recent activity. Again, generally choppy. It came from down to up here, and what happened? Oof. There's no real pinpoint, but let's see. We're having balance, a little more buyers and sellers. Nothing truly significant going on here. This number is really small, 2 and 4. But what's interesting is it's twice. The buyers are twice as much as the sellers, and it pushed down. So there's your anomaly. But I mean, it's so tiny you can't really work with it. I think it's just choppy. I don't know how to interact with this right now. If you were able to find that one and that one, you see, one thing is if you just kind of, again, looking just at candlesticks, it's pretty obvious to see when, just looking at recent activity, when it's been on the move, and then when the moves are just smaller and smaller to the point where it's just literally sideways. And you can see it's just getting smaller and smaller, the moves, right? It's gone sideways. And in this case, you can see anomalies everywhere, and it's really, you're just inside chop looking at anomalies. You want to be careful. This could be a downfall, pitfall of this kind of trading. But when it's significantly on the move, like up here, and then you see the anomaly up here, then you take the short. Now you're actually in a much better position. So again, this is a matter of reading the mood of the market, if you will, or reading the current behavior. And the behavior right now is sideways. It's not active. But the behavior back here a couple hours ago was, well, firmly upwards. So you can tell it's directional, it's moving. As long as it's directional, you can take a directional position, long or a short up here. And even if you took the short up here, you'd probably still be in it, and you wouldn't be bothered about the sideways because it's Your entry would have been here. Your stop's up here. It hasn't hit your stop. It's just sitting there. So these are things to think about. Again, the mood of the market. And again, just candlesticks. You don't need any complicated charts. Just candlesticks will tell you this. All right. Wow. What do we got now? Oh, wow. It's past 8 a.m. here. I should go find a gym somewhere. All right. Anything else you guys got on your minds you want to discuss before we end this one? And get into the Friday. 8 a.m. on Friday, and to me it's the weekend. Look at that. Fun, huh? Tell you, man, trading's all about freedom, not about hustle, about freedom. I don't believe in weekends and weekdays. It's all just routine. So, cool. What do you guys get? Oh, well, you're in the MNQ short. All right, good. Carl's looking at gold as well. Yeah, it's all happening. Well, sounds like you guys know what to do, how to trade, all the fun stuff. This has been good fun session again. Get the recording up soon. So, lucky charm, sure. You got it. All right. Thanks a lot, guys. I will talk to you all again soon. Take it easy, and hey, thanks for hanging out. Always a fun time.
Thanks, Avi.
Sure. Take it easy, guys. Thank you.